Hey, good morning, everyone. Saturday morning. Just want to do a quick recap and some more and provide some more information on the trading model that I use. So today we're going to talk about time frame continuity and understanding that within this model. It's very important, especially with the strat. But just to give an overview of the model, it's simply waiting for price to enter internal range liquidity in the form of fair value gaps on a higher time frame, so 1 hour, 4 hour mostly. That is what I use for day trading purposes. And then using strat reversals to enter positions and then ultimately add to those positions as they become winners. And I'll dive into that in a little bit as well. But kind of just wanted to go over the importance of time frame continuity. This is a strat concept. So I have marked out the 60-minute opens for the first few hours of the day. So 7 a.m., 8 a.m. my time, and 9 a.m. my time. And just showing you how you should be aware of these 60-minute opens with the strat. You can treat each 60 as it is a daily chart, right? So um, within that, here's the 60-minute chart. So you could treat each of these bars as a daily um, trading session, right? So open, high, low, close, open, high, low, close, open, low, high, close. You see we get a reversal. Price ends up reversing all the way back up to create a new high of day. Um, but initially, market opens right here, creates a 15-minute shooter, right? Now, if you're a true stratter, you could take this because at this point, everything's red. 60-minute opens up here. We're below that. You can take this entry with your stop up here. Don't get stopped out. This trade ends up going 105 points before reversing against you on the 15-minute. Um, Now, with my model, looking at the 5-minute over here, yes, there are reversals coming out of this um, 1 hour fair value gap, but you need to have context. Way below 7:30 open. Um, Time frame continuity at this time is red. New 60 opens here. Yeah, you could take this. You'll get stopped out. And something with the strat is that with those entries and that's kind of where ICT traders will come in and say, well, yeah, you don't have any confirmation. All you have to do is just wait for this reversal here and then get in on the fair value gap, and that's true because there's no fair value gap being formed on any of these reversals out of here. But also, you're getting chopped up, accumulation, and there's no 15-minute reversal to the upside either. We're continuing to go down. So price comes all the way down. Again, we're below the 60-minute open here, but this is why it's important to have two time frames up, at least two. Um, I think a lot of people will tell you probably need to have four up there so you can have the full picture. Um, but we do end up retracing down and tap into another internal range liquidity, fair value gap, um, which presents a 5-minute hammer. That's actionable. You can take that, which creates a 15-minute hammer. That's actionable. You can add to that. Um, which creates a 30-minute hammer. That's actionable. You can take that, which creates a 60-minute hammer. That's actionable. You can take that, right? So all of that stemming from internal range liquidity, 5-minute hammer, 15-minute, 30-minute, 60-minute. And then at this point, we're green on the hourly, green on this hour, and we go inside, get stopped out, but it sets back up. Now, I kind of just want to go through what this looks like when you add to your winning positions. It's going to be a little sloppy here just because TradingView doesn't have the best like back testing. I don't know how to, unless I just don't know how to use it, but I don't know how to place stop orders, stop buy orders, so I'll just get in as they kind of happen. So there's one. Right, so our initial position triggers the 15-minute, triggers the 30. Triggers the 60. Now we're in. And after that 60 trigger, we can just move our stop up to right there. Right? And then what we can do, since it is going, can just move it back to the entry. So if it does come back, look at how much profit we're in. And I know, a couple of these weren't the best entries. It should be one here. But that's what adding to a winning position does. And one thing I'd like to point out with this and adding to the position, and you'll hear stratters say all the time, like, oh, it should go right away. And they're right, it's true. Each of those positions should go right away. So you get stopped out, right? So if you're trading micros, that's $470. If you're trading minis, you just made $4,000. Now I get it. There's a couple entries over here out of this fair value gap, and you get stopped out. You take small losses. And I just want to point out Alex Options, a guy I really look up to in the trading space. He's a true stratter. I think he was. I'm not sure if this was a funded account or if he was working on getting a funded account, but takes a lot of trades, which is fine. There's nothing wrong with that. Only 32% of his trades were profitable, and he ends up making $2,000. It was basically trading a 2-to-1. Now he doesn't do risk reward. He's said that much, but you look at his profit and you look at his total loss. It ends up being a 2-to-1. So the point of that being, his winners make up for all of his losers. And what I'm trying to say here is, yes, there are strat reversals coming out of here on the 5-minute, just like there is down here. But you can take a few losses in here, small loss here, right? Small loss here. And then there's no reversal on the 5-minute, all the way down here until right here. And then what happens? If you held this this position all day, 5-minute, I mean, at its peak, I'm not saying but you got 180 points there, right? That's going to make up for, plus you're adding to this one, because it goes, and yeah, you get stopped out, but those 1, 2, 3, 4 contracts before you get stopped out, like I showed over here, make up for all these losers in here. So that's all it takes is one. And I guess going back to my point, when you hear people say it should go right away, get out of this bar replay. Notice the bar that does the triggering of our actionable signal. There is no wick on this candle. And then the 15-minute bar that triggers the 15-minute trigger. Basically, just the tiniest of wicks, right? 6-point wick. So there's ways to see if that thing's going to go right away. And I like to use the wicks because they're not selling in here. The algo's telling it to buy, right? And then the 30-minute trigger, it's the same wick as the 15-minute. So You know where that's going. Oops. And then when we get that 60-minute trigger, look at that wick, small, right? So the wicks can actually tell you a lot. And that's something I've been noticing on the daily charts as well. Like obviously we had a huge day on Thursday. Look at the wick on that daily chart. I mean, there's nothing there. And when you have big wicks like this, choppy ranged environment, but on a daily candle, relatively small wick, so we're buying. I mean, you can just wake up in the morning and see this stuff, right? No wick right here, we're buying that day. Small wick right here in the morning, selling, selling. So that's just something unrelated to the strat or anything else, but even these 4 hour candles, look at this wick, 8 o'clock open, 10-point wick to the downside, puts in the low, and then rips 182 points Thursday morning. So just some things that I've been observing as I've been trading. But yeah, again, the model's simple. If you're a beginner trader and you don't want to take these types of losses and it messes with your head, just move up a time frame. Move up to the 15-minute. This thing doesn't reverse against you until right here. 87 points. Okay. Maybe you get stopped out here. Maybe you re-enter on this reversal because rules still exist. Get stopped out. That's fine. No reversal, no reversal. Boom, reversal again. So let's say you were to take this one, right? 32-point loss. So after this trade, you're sitting at 50 points in profit, right? 87 points. And then let's just say, your stop was down here. Now there's a way to reduce that. You can say, okay, this thing doesn't go right away. It turned red on me. So, but so 32 points. So you're up 55 points here. No reversal, no reversal, no reversal, no reversal, reversal. And you get stopped out right here for 66 points. So now you're above your initial trade here. 87 minus the 32. So we're at 55 plus the 66. So over 110 points on the day just from 3 trades. 1, 2. I wish these rulers would stay up. I don't know how to do that. And then 3. Right? And this works on any asset class, ES. Obviously, these are going to look similar. These charts are going to look similar. Same thing here. Okay, so 8 o'clock open, right? This is a trade I probably would have taken. Reversal. You get stopped out right here for 6 points. Taps into this fair value gap. 18 points. So you're up 12 points on ES. Right? Actually, no reversal out of this one. So you avoid any losses here. And you take this one for another 12 points. So 24 points on one ES contract. That's $1,000. Just trading the 15-minute time frame. See what the 30 looks like. Now with the 30, you get stopped out here. Minus 13 points. Now, again, there's ways to not take that full loss. If this thing triggers and then comes back in, it, should be a warning sign to get out, and then if it does re-trigger, you can get back in. But just being fair to the strategy. Get in here for 15 points. So that's an issue, right, with the strategy. 13-point loser. Still, winner's bigger than the loser, but there's ways to keep your stops tight enough to where if this thing triggers, let me just see what this looks like anyway. So the 30-minute trigger. So here's our 30-minute open right here. So our stop would be right here at this point. And listen, I would 100% take this trade. It would be a losing trade. I would 100% take it. We'll just call that our stop out, right? But this is how you avoid taking a full 1-bar rev strat reversal to the face. I said right here. So 9 points nearly. Still a hefty stop loss. But if you're trading one micro, that's 45 bucks. So we're down 9 there. Get into this. Get 15 back, so now we're up 6 on the day. Could take this one here. Get stopped out, but that's 1 point. So 15-minute. It's pretty nice for risk reward. Taking this one, so that's stop out. Right, taking this 15-minute entry. Stop loss will be the same. It's that 8, the 8:15 candle. But then this one hits for a 3.4 risk reward. Then this one hits for 5. So it's all about letting the winners do the talking, as they say. Same thing here on CL, crude oil. NY session opens here. Tap into this fair value gap, but don't get a reversal out of it. Tap into it again. Not necessarily my favorite, like 2-2 reversal, but again, you do get in and don't get stopped out until right here. Not the greatest trade, but can always just put stops as runners or break even and let things run as well. So please comment below if you've got any questions. No, that's kind of a long rambling session there, but yeah, I just wanted to review Friday's price action.